What's up, Cloud Life familiars? Overflow Nexus back again, giving you the latest and greatest strategy. And today I'm going to be giving you guys an Ichimoku cloud trading strategy that's going to get you guys some big profits. Let's check this out. So right now we're looking at Bitcoin. We're going to be focusing on this blue zone here. And this is the zone that I like to look for my trades. This is what I call the TK zone, where we are between the Tinkinson and the Kijinsen, which is our Ichimoku EMAs, or moving average, so to say. So when you see this, when price is in between these two lines, you want to look for trades in this zone. So what I tend to look for, once I see price dip into this area, I start to look at, I start to look at the market to see if price is going to, range in here or start to push higher or lower. So in this case, we're looking for the market to push higher. The reason why is because we're focusing on this TK crossover right here, which was bullish. So we'll take a look at that. So that's the first confirmation that you want to look at when you see the market in a TK zone. You want to see what the crossover is, right? So once you find out that crossover, what you're gonna do, you're gonna start to notice that price here is fluctuating. So once price dips in between here, like it did here, that's when you start looking for the trade. So you will look here for the entry. What you would do is, I'll show you guys right here. Entry would be right there. I'm gonna make this green so y'all would know. Make it a little thicker. So this will be entry right here. Stop loss would be right there. Kind of a big stop loss, but when you're playing in areas like this, you have to have a good stop loss. Or you can put the stop loss right at the open or close, depending on what candle you're going in on, of that stop loss there, of the open or close of the candle as well. So in this case, I'm going for the last low, or the major low in this area. So that's where my stop loss will be, because if you look at the next candle, you got stopped out if you put your stop loss there, which is fine because you got another entry anyway. Right here, you see the market broke the Tinkinson and start pushing higher. So that's another entry right there. Notice how price fell back into the TK zone over here. What we would do, you see we have a bearish engulfing candle. You have price action here. You put your entry right above it. Stop loss either at the bottom of this candle, the entry candle, or at the low. So you have your stop loss here. Let the market take off and trigger you in, and boom, you're off to the races. Now, does it work all the time? No strategy is bulletproof, but this is a strategy that I like to use. I like to mix this strategy with TDI. It keeps me in it keeps me in the market. It keeps me waiting for a good trade. So when I'm using TDI in this area, look at how TDI is responding here. So let's say if you took this trade here, TDI is saying that the market is overall bullish, right? So if you took this trade at this point, it's not a bad trade. It's just you got it a little too early, because look what happened. The next candle knocked you out. But if you have waited, TDI gave you a second entry right here. Boom. Second entry was right there. You caught some profit. Same thing. Market falls back into the TK zone. Look what's happening in here. The thing that you have to do is you have to pay attention to what's going on in the market. You have to realize, be patient. Wait for the market to come into the zone. Make sure you understand what the market is doing, because the market likes to grab liquidity. If you look down here, there's some liquidity down in here, because this is where they are looking to stop for stop loss hunts. So what you're gonna do, looking at the TDI, notice TDI has not given you a signal just yet. Right here, you could have entered the trade if you wanted to. The reason being because you do have price action. Another reason, looking at the volatility band on TDI, we're bouncing off this area. So notice how TDI is moving higher, making higher lows here. It is following price. So this is another good example of getting in. And if you didn't trust that, you could go down to the 1 hour time frame. look for the trade in here, right? Same area. What you're doing, wait for the TK zone. Same thing. We're in the TK zone here. Wait for that breakout. Broke out, boom. Market popped up. Even right here popped up. So at this point, it's going to depend on where your stop loss is. If you entered it on this first candle right here, boom, stop loss right underneath here. Look, it never stopped you out, and you're still in the market. You're still riding this market. And notice here, if you, let's say you missed this entry here, right? You can catch this entry. Stop loss right here. Market never returned back. The thing is, you're looking for trades within this zone. When you figure out that this zone is pretty good for trading spots, it's where the market is gonna start moving the most. That's why I like to trade in the TK zone. If you don't believe me, just back test it. Look at areas where the TK zone, where prices in between the TK zone, it might range for a bit, then it starts popping off. But notice for this one up here, it never broke this low. It stayed above this support level, and then boom, took up to the upside. Another trade. Look here, we're back in the TK zone here. Look what happened. Market breaks out of the TK zone, starts pushing higher. Follow TDI. Look at the TDI with it. Let me show you one bearish example if I can find one. Here's one up here. Let me make it clear for you guys because it's not easy sometimes. But look, right here, crossover. We're in the TK zone. Notice how market is ranging. We got a bearish crossover here. So if you're looking for just a crossover, you might not want to get in this one. But if you are paying attention to the structure of the market and what's going on here, notice how market never broke this high. Market was unable to get up here, and notice how it's making a lower high. So when you're noticing the market is doing stuff like this is a good indication that the market may not break higher. Look what happened. We're in the TK zone. Market breaks below. Boom, right there. TDI is also telling you short. This is a good short, and boom. This is how you find those big trades where the market's about to take off. You see here's a good one. Here's another good one. TK zone trades are one of the best trades you could take with Ichimoku. I promise you, these trades will get you some big profits if you pay attention and if you're patient. All right. So you guys test this out. Use it. If you want to hear the strategy again in more depth, I will definitely do that. But this is as simple as it gets. You can enter the market with price action based off the TDI or whatever indicator that you use to enter your trades. Use it as a confirmation to get in the trade, and you will be successful. All right, that being said, you guys, peace.